Absolutely, yes. I mean, certainly the market's in a much tougher place than I think we thought right after the Fed meeting last Wednesday.
Where do you think that left us? This idea that Wednesday bounce, somehow there was room to be dovishness, has that completely been evaporated?
Well, I think what's happened in the past Fed meetings is when the Fed has spoken and said something that has felt like we could end up with a Goldilocks scenario, the markets really run. And what's really different about the backdrop for this Fed meeting versus in January and March is when they spoke then, there weren't earnings announcements coming out within a few hours of the Fed's meeting that really demonstrated that there's some underlying fundamental weakness to many companies that have very high valuations, that have been the type of companies that have benefited a lot from a belief in a Goldilocks scenario.
So you think unlike the last couple of meetings where we had equities rally in the ensuing couple of weeks, this time we had earnings almost as a reality check to the Fed speak we got once the blackout window reopened and just from the chair's presser, in other words.
Exactly. I mean, we saw earnings reports. I mean, right before the Fed meeting, we had some, in on-demand mobility. We had a lot of e-commerce names. We had names exposed to internet traffic. We had names in the semi-space. We've had software names, all with disappointments. And so it's really hard to maintain a belief that we can just run on momentum and run on fundamentals and the Fed when companies are disappointing. So the question is, like, where do we go from here? We've already had a meaningful, or sell-off since Wednesday. I think that fundamentals are going to continue to reign, be what drives the market. And so I would continue to be focused on companies that don't just have potentially great fundamentals in 2040, but those that you expect to have good, strong, real free cash flow in the very near term. And those companies that don't, I think, are going to, be really asking themselves, can they raise price or are they going to have to cut costs? And the valuations of those companies, many have not really re-rated to a point where you can make a difference on those fronts in the very near term. Right.
One name I know you like is T, right?
Yes.
Why does that fit all the boxes?
Yes. So, and we own AT&T, in full disclosure. So look, AT&T is, let's start with valuation and fundamentals.
That got reset.
That got reset. Look, you have a very nice free cash flow yield. You have over 5% dividend yield, low on PE as well. But a cheap stock does not mean it's a good stock. What's really, I think, interesting about AT&T and the telcos as a whole is that you've seen the competitive backdrop really get much more benign than it has been historically. And in the past couple weeks, we've had both AT&T and Verizon publicly discuss price increases. Now, to move from an industry which has been potentially deflationary.
Exactly deflationary over time in wireless service.
Yes.
It was a joke with the Fed a couple of years ago.
Exactly. In 2000, I was paying $100 for my cell phone bill, right? And I had a cell phone, this little tiny flip phone, I had to pay for entirely myself. And now it's $50, right? So there's a lot of room for pricing in this space. We rely on our phones more than we ever had before. The competitive backdrop's getting better for them. They're really starting to compete more with the cable operators, where we're less constructive rather than amongst each other. So if you do, look, we don't know if any price increase would hold. If they do hold, though, there's a lot of free cash flow that just flows strictly to the bottom line because they have a pretty fixed cost business. The other thing is if the competitive environment really becomes more benign, they could potentially pull back on promotions and marketing, which are very serious expenditures for this space. So there's really the opportunity for an inflection in the business, and they're just really overlooked, kind of very boring stocks that aren't cyclical very much as well.
Right. And we'll talk more about it in a little bit, but the dividend, of course, we've talked about. The degree to which it was at risk a while ago. You clearly don't think so anymore.
I don't think so anymore. And with a spin-off of Warner Media, their debt structure is much more manageable as well.